vita of
Oh. David is
accomplishments
head
for
of the
the
Chamber of
community.
Commerce, and he's been president of the Summit Board of Education, president Dartmouth Club, Suburban, New Jersey, president Paul Harris Fellow, Rotary Club, president of the Summit Tennis Club, he heard that, president of the Downtown Club, trustee and planning and budget chair of Overlook Hospital, VP Summit Area Public Foundation, trustee investment committee of the Summit Area Y, head agent for his Dartmouth College class, member reunion and gift committee for Chicago Law, service committee of Dartmouth Alumni Council, advisory committee member of Dartmouth Friends of Football. Just a remarkable list of things that he has done for the community and for his own communities. A very distinguished member.
Peter, it raises the question, is there any organization David has been involved in that he did not lead effectively as president?
It would be a big mistake, right?
Yeah,
If you had him, you'd want him in charge.
absolutely.
Right.
So we're going to ask you, David, to do your presentation. Do your thing.
Okay. Well, thank you so much. Your intro was so kind and so forth. And I am so proud to be a member of the Rotary now for about 26 years, I think. And so flattered to have had the chance to speak with everyone several times here. Before we get into the meat of it, I have to tell you that, we couldn't do what we do without really first-class colleagues. And right at the top is Fritz Schoenhut, who you're going to hear plenty from today because he's a young hard charger who has a very open mind about all things investing, including he's a specialist in Bitcoin. Fritz is a managing director and portfolio manager at Peapack Private. He came to us in 2019 after nearly 6 years at Goldman Sachs, where he helped advise people that I think their net worths were larger than the aggregated net worth of all the people we work with. It was really high-end stuff. And he dealt with them in terms of their investment portfolios, asset allocations, complex trust and estate planning, working with their accountants and attorneys. But before that, he was a tax guy at Grant Thornton, helping to do those same high net worth folks' tax returns. He is a proud graduate of the University of Notre Dame with a bachelor's in, what would you expect, finance, also that master's in science and taxation from Baruch. And he is also a chartered financial analyst. He is a recent new resident at Berkeley Heights. They now have a newborn son who I think is just over 1 year old. You got to look at the picture. Sometimes it's darling, and he lives there with his wife, Gina. So Fritz is going to be carrying a heavy load for this presentation. But let me just kind of intro a little bit. Our title, of course, Bitcoin, Digital Tulips or Financial Innovation, black or white. We may come down a little gray. We'll see. Fritz will tell us, actually. Next page, just to remind people, where we're coming from. I founded Point View in '93. Started with my parents and my sister, just about all. We got it up to over $400 million under management, looking to transition. Ultimately, we had a great chance to partner with Peapack Gladstone Bank and their division, Peapack Private Wealth Management. Peapack Private Wealth Management down the road in Bedminster, New Jersey, managing now well over $8 billion under management. This works really well for our clients. Why? Because we've got more resources, industry specialists and whatnot. We can also focus on people's liability side of their nest egg with all sorts of loans and financing opportunities. And then increasingly, for example, just this morning, talking with a family about their 40-year-old son who unfortunately is a special needs situation, and the parents are aging out. They may need a trustee. Peapack is so well suited to do that. And so we've got, so many extra resources there. How do we part company from the rest of the crowd? I think number one is we use individual stocks and bonds. We don't just take the money and then put it into other funds. We charge a fee. The other funds charge a fee. Pretty soon it adds up. We're also looking for extreme tax efficiency. And by unbundling the portfolio, we can offset gains with losses and so forth and really be as tax efficient as possible. Of course, it's all about customization. We try and mold the portfolio to the client as opposed to the client decide whether they like the portfolio. And so those are, we custody all our investments at Fidelity Investments. Now, Peapack down in Bedminster does work with some other brokers. Here in Summit, we just work with Fidelity, but people have accounts in their own name. And so we feel we have the utmost in asset security, which is always of critical importance. At this point, I'm going to flip it over to Fritz to get going on the substance here.
Yeah, thanks, David. So thanks everyone for having us out today. And so when it comes to Bitcoin, I think it's great to start off with, what is Bitcoin? I think a lot of people, not really sure what it is. We saw this meteoric rise in 2017, 2018. And, now we're seeing kind of this slower but stronger buildup, and, it's trading up near $60,000 a coin. And, the question is really, what is it? And so Bitcoin is a digital asset or digital currency created in 2009. A otherwise anonymous Satoshi Nakamoto created this new technology, and in the code itself of this digital asset, so it's a currency that's really held only through computer files. There's only a finite supply of it, so there's 21 million coins, whole Bitcoins that will ever be available. Currently, there's about 18 million outstanding. And this currency is decentralized. And so there's no, where the US dollar has the Federal Reserve and, there's central banks around the world. There's no, one authority that is controlling the supply of Bitcoin and controlling the flow of it. So, it's a decentralized asset. And how does it work? What happens is you have this peer-to-peer blockchain technology, and essentially what that is there's various computers around the world. Anyone can link their computer up into the network, and these computers, they use a tremendous amount of energy to verify transactions that are being taken place. And there's this public ledger that you can see the history of any transaction having taken place. So there is this sense that it's very secure because it has this public peer-to-peer quality to it. And then lastly, one thing that we've been seeing a lot in the news, and it's good to bring up here when thinking about Bitcoin, is the store of value. And so I will say, going back, into the 2009 probably through 2017 and 18, it was really viewed as the next currency of the world. I remember speaking to some people that were interested in it back then, and it was viewed as it'll be the next universal dollar. And that's kind of given way a little bit to being more of an asset, and now even more of a store of value, like a digital gold. Something that, because there is that finite supply, it's something that will hold its value longer. Which brings us into, the bull side, or the bull scenario, and then, is this financial innovation? So, on one hand, it's certainly more portable than physical gold. You can store it electronically. You don't have to carry around, your gold bars everywhere. If you have access to a computer, you have relatively, you have the access to your digital wallet that'll hold your Bitcoin and other cryptocurrencies. It has faster transaction time than cash. And so sending Bitcoin from, me to David, let's say David's on the West Coast, if you were to do that through your bank, it might take anywhere from, you know, a couple hours to a couple of days in some cases. Whereas with Bitcoin, you can transact and make that transfer within, you know, a short period of time, typically a couple seconds to a couple minutes. You know, it's viewed as having a value in the scarcity. And so as mentioned, there's only 18 million Bitcoin that are outstanding. You know, when you buy them, you can buy fractional amounts, but that's the most, or the most there ever will be 21 million. And so, you know, the fears of, you know, central banks continuing to print money and potentially, you know, deflate their currency, or debase their currency, and you're seeing this rise in inflation, the fact that, you know, there's only a limited supply out there, you know, adds to the fact that, you know, with more money being pumped into this new asset class, you know, the price will go up. You know, there's in a growing ecosystem of vendors and facilitators out there that are willing to transact in Bitcoin. And so, you know, we've seen Tesla just recently come out and say that they're going to be allowing people to purchase a car with, you know, their Bitcoin holdings. You know, PayPal has the ability to, you can transact in Bitcoin. I think Visa as well is either there or working there. And so there's this building out of the infrastructure required to bring utility to the coin itself. That's one thing that it's lacking, is a bit of a utility. But if, you know, the thought being that as that utility rises, you know, the value of the coin, just increases even more. So along those same lines, the institutional acceptance. So not just from, you know, the side of where there's more utility and growing out, you know, being able to use it and transact with it, but the institutional acceptance on the investment side as well, where you have, you know, more institutional investors coming into the market and investing in Bitcoin. And so, you know, when we're taking a step back and looking at 2017, 2018, the rise and fall then versus what we're seeing, you know, today and over the past several months, really going back to last March, you're seeing, you know, back in, you know, a couple of years ago, not many institutional investors were getting interested in this product. It was mainly the fervor of the retail investors, you know, bidding up the price and then watching it fall. What we're seeing now is more institutional funds, hedge funds. We're seeing some pension plans. I know I think there's definitely an insurance company that I was reading, might be New York Life, was allocating a very small part of their portfolio to it. So, you know, it's still, there's still a lot of room for growth on that area, but there is the sentiment that this is all a good thing for the maturity of Bitcoin as more institutional investors get or dip their toes in. So as I mentioned, is this a hedge against currency debasement? So, you know, if central banks continue to print money and to, you know, we're adding more and more debt, you know, at the, you know, government level, there's concerns about what this will do to the value of the US dollar, or, you know, any currency around the world going forward. And so a lot of people are seeing Bitcoin as the potential to, because it can't be printed more than 21 million coins, there is this potential for it to be a hedge against that inflation. And the question of increased diversification. So does adding Bitcoin to your portfolio increase the overall diversification of your portfolio? And David's going to touch on that in a bit. You know, there have been some signs that certainly Bitcoin is, you know, any additional investment in a totally different class is going to add diversification to your portfolio. But that said, you know, the amount of time that really people are looking at in terms of the history of Bitcoin and the pricing and how that would affect a portfolio, it's very short. And so, you know, there's not a lot of data really out there to make a strong call there. So is Bitcoin, rather than financial innovation, is this the digital tulip? And so maybe a lot of you are familiar of, you know, the tulip mania. You know, is this something familiar or similar to that, where, you know, there's really no value to it? It's just being bid up because people think it's worth something, and ultimately will it come crashing down? And so there's a couple of negatives to Bitcoin for sure. So it's definitely hard to store. So while it might be easy to carry around with you physically and maybe to move it from one to another. It's certainly difficult to store. You have to have an account with a cryptocurrency exchange, and these have all had their hacking issues. Or you have to have, on your own computer. It requires certain tokens and keys to be able to store it. And there's plenty of stories out there with people, losing what's valued today at about millions of dollars in Bitcoin because they don't have access to their keys. They've lost their keys or their tokens, and they can't access them. So there's a not insignificant percentage of the Bitcoin that's outstanding are actually lost due to people not having access or forgetting their passwords. It's difficult to manage, and so there's really, there's a couple of investment tools out there to get access to Bitcoin, but other than that, it's not an easy asset to manage in terms of already having your one platform, your Fidelity, your Schwab, owning the actual Bitcoin itself. It's a difficult asset to buy, other than creating a new account, as mentioned, on an exchange, where again security issues have been present in the past. It's a very volatile asset. Last year, back in March, equities were down anywhere from 30-35%. Certainly a lot of fear and some panic selling taking place. Bitcoin was down 50%. And we've also seen it rise a couple 100% in a very short period of time. So it has these very strong and sudden moves up and down, making it volatile and leading to questions on whether if it's an appropriate investment for every investor. There's a lack of regulatory acceptance and clarity. So the SEC has come out and said that Bitcoin is not a security. That said, that doesn't necessarily mean that it's green means go here. There's been questions on whether it could be even outlawed, like it has been in India and other places of the world. And there's really hasn't been much discussion from other regulatory bodies in terms of how are we going to regulate Bitcoin? How are we going to monitor the buying and selling and the transacting in it? As mentioned before, there is some utilization starting to creep in to Bitcoin, but it's still very low utilization. You can buy, or soon will be able to buy Tesla with your Bitcoin, but as soon as you put your Bitcoin to Tesla, that's a taxable transaction for you. So if you've been holding for a very long time, potentially a large capital gain is coming your way. So it's not considered like using dollars on a day-to-day basis. I mean, most people are holding Bitcoin because they expect the value to go up. So it's questionable as to why you would use it to buy anything if your expectation is that it's going to outperform the dollar in the long run. And then lastly, Bitcoin mining is essentially centralized in China. So the majority of creating new Bitcoin, which is verifying transactions on this blockchain, the majority of that takes place in China. And so there's a lot of question marks as to whether, how is China going to perhaps maybe crack down on that industry, or is there, any ramifications to the asset class or potential pricing issues with such localized control over the creation of the coin itself. So with that, I'll pass it back to David, where he'll give the opinion on whether we should be investing in Bitcoin.
Hey, thanks so much, Fritz. Wonderful. The short answer is I'm not sure about it, but you have to understand where I approach these things. Two things. One is we are inherently conservative investors and advisors, and that's underscored. My clients always want to make a lot of money and so forth, but I would say, well, let's say you started with $1 million, it went up to $1.4 million. How happy would you be? As opposed to being sad if you lost 400 and you went to 600. And you know what the answer is. So, rule number one in this business is don't lose money. And rule number 2 is don't forget rule number 1. So we're basically about capital preservation. We're not about buying lottery tickets. I'm also a Warren Buffett disciple. Well, I love one of Warren Buffett's quotes is, "It's all right to leave the bat on your shoulder." So what does that mean exactly? It means that if you don't really understand an investment, if you don't really have confidence in what you're doing, you don't have to do anything. You can just watch from the sidelines and stay there. And that's kind of where I come out in Bitcoin here. But so, you know, the arguments for is, you know, you're more diversified, aren't you, Dave? I mean, you got all these stocks and bonds and cash in my portfolio. Now we got something different. That's good, right? You always like diversification. Well, we're going to get to that. Hedge on the value of the dollar. Well, fortunately, we haven't been through a big period of inflation recently, but people say, you know, it's a hedge on the value of the dollar. Well, just about everything that isn't a dollar is a hedge on the value of the dollar, because it's, you know, a lot of rare cars could be a hedge on the dollar. So that doesn't quite get you to where you want. Limited supply. Well, Fritz is the expert as to how they're going to cap that supply. And the people in China are going to behave themselves in terms of the mining, but they say it's limited supply. But what isn't of limited supply? Oxygen, clean water, everything is of limited supply, so that may not be enough. Natural alternative to gold, that presumes that gold is going to get you to retirement financial heaven. So we'll talk about that. And of course, the final thing is, this sucker is going up. Let's get on board. So let's examine these things a little bit next. So, you know, modern portfolio theory suggests real caution. So many people, when they're investing, they want to reflect what your investment opportunities are. Well, the world has about $100 trillion in stocks and about $100 trillion in bonds. The market cap of Bitcoin is about 1 trillion. So it's about 0.5% of the world's assets. So it's not really reflective of generally what's going on. It's just kind of a little rounding error. So you certainly don't have to have exposure to get the general investment experience that most people would want to hedge paper money and things like that. Probably one of the toughest things to swallow, and you see this little chart on the upper left where you have the orange line is the progress of Bitcoin and the blue line is stocks, and you can see one is far more volatile than the other. So, you know, one of the tricks to the investment game is if you're being asked to take on more risk, and risk can often be defined as volatility, you better get paid for it. Well, historically, since Bitcoin came on the scene in 2009, the volatility level is 6 times that of stocks, which would suggest that even if you're going to triple your money versus stocks, it's not a great deal because you're having 6 times the volatility. And the problem with volatility is it can shake you right out of your positions and cause you to jump off the metaphorical bridge when things get tough. And of course, it's 30 times more volatile than bonds. So that would suggest that it have to at least do 30 times better than fixed income. As an example, a few years ago, when stocks dropped 20%, Bitcoin dropped 80%. The problem with an 80% drop in the mathematics of investing is once you're down there, that means you have to have a 5-fold gain just to get back to where you started. That's not easier. Just earlier this year, one weekend Bitcoin was down 20%, the next weekend is up 20%. Again, are you really going to get paid for going through that experience? The other reason people often look at different asset classes is and say, well, if I add asset class X, it will zig when asset class Y zags. Well, unfortunately, that's not the case with Bitcoin. Now, the little chart on the lower left shows you correlation between stocks, bonds, and cryptocurrencies, right? And basically, there is a degree of correlation between stocks and crypto assets and bonds and crypto assets. So that would suggest that if stocks go into a bear market, Bitcoin's going to follow it down, and vice versa. What you really want is the other aspect. So, for example, bonds have almost no correlation with stocks. So high quality bonds are an excellent addition to the asset, to your portfolio, because if stocks start going down, the bond should hold up. But that's not been historically the case with Bitcoin. Compare that also versus gold. They talk about it being digital gold. Gold also is non-correlated with stocks, so that you can expect, there's no reason that if you have a stock bear market that the gold is going to go down. And of course, the US dollar also actually is inversely correlated with stocks. So holding dollars in a bank account would actually be a way to diversify better your portfolio. And of course, even if diversification is great, if you don't think it's going to be profitable, why do it? Next. You know, they say it's a hedge on the value of the dollar, but as I pointed out, anything can be, anything that's not a dollar is a hedge. That just doesn't get you to where I think you need to be in order to move forward on it. Bitcoin started in 2009. We've had an extraordinarily non-inflationary period since then. Indeed, our Federal Reserve is wringing their wrists here because they can't get inflation above 2%, which they want to do in order to get the economy jump-started again. And so we really have no experience as to whether Bitcoin will be a hedge in inflationary period. Now, admittedly, Bitcoin's done very well in a non-inflationary period, but that may prove too much. That suggests that inflation by itself is not really what's driving Bitcoin. You know, we talked about the limited supply, but what isn't limited? And I'm still concerned about, you know, hacking and other ways that all of a sudden it turns out not to be supply limited. We pointed out that the volatility level is much greater than gold, so it's got to return much more than gold just to justify putting up with that extra volatility. And again, as Fritz pointed out, there's no intrinsic value to Bitcoin. You can't eat it, you can't drink it, you can't raise crops on it, you can't produce widgets in it. Now, admittedly, there may be no intrinsic value to gold also, although historically that's had a jewelry component and some uses in manufacturing. Obviously, paper currency, no intrinsic value, but that's, I think, a negative on the Bitcoin situation. Next. So people say, yeah, Dave, but you know, it's going up. You know, it started in 2009 about $100. Now it's about 60,000. You know, do the math. Well, you know, from a contrarian perspective, that's actually a negative. Time and time again, when you start hearing your friends at cocktail parties talk about what's doing great, when you see headlines that talks about everyone's doing something, whether it's, you know, GameStop or internet stocks back in the 90s. I can remember people telling me in 2005, 2006, Dave, your stocks are great, but just put an addition onto your Summit home, just buy a home down at Seaside Heights or Bay Head or whatever. You know, no one ever loses money in real estate. When people get that excited about an asset class, that's actually, from a contrarian perspective, a real negative, because that suggests everyone's already into it. And when the worm turns, when the cycle changes, things can go south very quickly. Again, you know, it's that volatility that's a real problem. I also urge people to always re-examine their investment goals. What are they trying to do? And hopefully it's not to have the best portfolio in Summit or in the Summit New Providence Rotary or on their street, but to make intelligent, risk-adjusted progress towards their long-term goals, and always keeping in mind that they don't want to have a setback. Historically, dividend-paying stocks have outperformed regular stocks during downturns. Investments that pay income have held up better. Again, Bitcoin is like gold, no income paid out. So a couple of things. One is there could be less of a cushion should things start going south, because people won't say, well, I don't know where it's going to go, but at least I'm going to get some income from it to help me pay my bills. Or in a rising rate environment, remember, it's a little bit like a zero coupon bond where the return is well out in the future. Those mathematically are the most sensitive to rising interest rates, so-called long duration assets. And here, Bitcoin is there, since it pays no current income, it's going to be hit hardest if interest rates do move up. Fritz talked about the taxation. It's actually a little worse because stocks, by virtue of earlier changes in the tax law, are taxed about half the rate of ordinary income with a cap of 20%. But collectibles, which includes gold, silver, and I believe Bitcoin as well, are actually taxed at 28%. So you don't get quite as good a tax treatment as you do with your stocks. And of course, Ether is also in the news here. You know, one of the things that we just don't know is, even if ultimately we're all going to be using cryptos, will Bitcoin be the survivor, or will it be something else? I still remember the Tom Brady's spouse, when the euro was doing really well in 2007, said, my contracts no longer call for acceptance of the dollar. I only want euros. We see how that turned out. Of course, people are saying, you know, protections, FDIC insurance, SIPC insurance, none of that. Storage risks. And of course, one of the secrets to money management is to keep it simple and getting consolidated on one single account statement. And that is harder with Bitcoin, because often you have to have a different broker, different account statement. Next. People also talk that there's a huge carbon emissions when they mine these Bitcoins. So you wouldn't think that was one of the biggest problems with Bitcoin, but increasingly, as people are very sensitive to depredation of our environment, that is being thrown at Bitcoin. So something to consider. I love the idea of not having to use paper currency. Credit cards work very well for me, but if you had a crypto which was linked to a dollar or linked to some other currency that you had confidence in, that they could keep it somewhat scarce, I think that might solve at least the problem of, you know, how's this cap going to work, who's in control of it, and so forth. So I think actually a dollar-linked crypto might be ultimately where we're going. I don't think that's going to be good if you're holding Bitcoin. Systemic crisis or other reason forces government to ban cryptos. Two things I would point out. For a while in this country, for most of the time since the starting of the country, gold was the currency. And then in the Great Depression, to reduce runs on banks and people hoarding gold, they made gold no longer legal tender for debts in this country. And so you could see something here where if there's some sort of banking crisis and people all of a sudden said, well, Elon Musk is doing it, PayPal is doing it, I'm going to take my money out of the bank, I'm going to put it into Bitcoin, or for that matter, any crypto. That's not going to work for the government. They've got to control that monetary system. And so that could cause an outlawing of cryptos or extreme regulation, which would not be good for speculators. Bitcoin hacking, cap gotten around, and of course, to the extent that you really want no one else to know what you're doing and you get a digital wallet, you got a key to the wallet. And I think if you lose the passcode to access that, I believe you are out of luck. So guys, that wraps up the formal part of our presentation. Rotarians always ask great questions, and we look forward to addressing them. And Bob Davies already has one, and I'm going to give this to Fritz. Bob Davies asked, will Bitcoin result in a digital wallet? What about hackers affecting corporations and people? Fritz, go for it.
Yeah, so there's a couple different ways to, I guess, hold Bitcoin. And it's like I mentioned, you can either hold it through a cryptocurrency exchange. You haven't really seen the major brokerages offer that just yet. But if you hold it through a cryptocurrency exchange, of course, there's hacking concerns there. There's also a way to If it's not through like a Coinbase exchange, oftentimes you do need to create your own digital wallet. And we've seen a lot of hacking attempts there as well, because that's just directly through your computer. You hold your secure your cryptocurrencies, on your in a file on your desktop, or not too sure how that is actually done. But it's not through an exchange. It's just you are the one that's bearing all of the risk. And there are hacking concerns there. And then from on the corporate side, not too sure how Tesla has decided to go on and put Bitcoin on their balance sheet, but I believe that they do work with, Coinbase, or I think NYDIG is another exchange. But there are a couple, they mainly work with the larger, crypto brokerage firms to add funds to their digital balance sheet. So we haven't seen any hacking on the corporate level yet, but certainly there has been at the retail side.
So, Fritz, you want to stop the screen share so we can see everyone's faces? And who else has a question? Hey, Roz.
I think
Melanie.
Melanie.
Sorry. I have a question about money laundering and Bitcoin. Like, is that a concern? As a nonprofit, should I be concerned about accepting Bitcoin because there's a bigger chance of like a money laundering issue going on?
Fritz, want to take it?
Sure. So I think, that's, going back, I was reading a report on this a couple of months ago, but, a couple of years ago, there was a much bigger concern for the money laundering aspect of the cryptocurrencies. It was really the wild, wild west. There was no way to really know who you were dealing with. And in some cases, it can still be very, very anonymous. But, if someone were to hold, Bitcoin, let's say, in their Coinbase account, you can receive a transfer directly from, a verifiable exchange. So, I think the money laundering issue is a little bit less than it was a couple of years ago. And to be fair, it's a little bit less than I think what a lot of people in Congress or the regulators think it is. From what I understand, it's that the money laundering and the criminal activity has actually gone down in relation to how big and robust the market has become. But I think, if you can verify that it comes from an exchange, but then you have to also think about how are you going to, if you accept Bitcoin, what do you do with it? And I think then having it, you'd have to open up your own Coinbase account or something to then be able to sell it into the USD. So there's a lot of, it's still pretty early, I think. I haven't seen too many, I don't know, maybe you have a better idea of which foundations have started that, but.
No, I'm just waiting for somebody to offer me Bitcoin. I would just call you guys and say, I've got an offer of somebody to Bitcoin to the art center.
Yeah, so Melanie, we have, and I know that if I bought, we're talking a substantial gift, about $75,000 in Bitcoin, and I can't wait to present this to David and the investment committee in a few weeks, because nobody here wants to have Bitcoin on our balance sheet or in our investment portfolio, but nobody here has any idea what to do with it. And Fitz is right. Like, do we have to establish a Coinbase account, or there's not a corner store down the street we can go to and cash this out.
Right.
So I think there's just as many questions as answers, right, guys?
Yeah, I think.
Go ahead, Fritz.
I think what would make the most sense for that donor is that I guess they're trying to get away from the tax aspect of it. But I think as soon as I would wonder who gets the tax hit. Or I know you wouldn't get any as a foundation, but I would think, maybe it would be treated similar to how you purchase a car. You gift, with Bitcoin, is you get taxed as soon as you make that transfer, because it's considered, you have to make that consideration in cash. Yeah, that's an interesting one. I can do some research on that, and we can follow up. But I haven't heard that one.
Yeah, it's something, I guess, as a nonprofit, we're always thinking of, because people offer us things and we want to accept. We just need to know how to accept it.
Yeah.
I'd love to hear how the SAY handles it in the long run. That would be great to know.
I think accept it and sell it.
Invert.
But certainly, I mean, it helps if it's not, you always want to know your donor. So hopefully it's not an anonymous. And I do think that just like someone gives, a low basis piece of art, some foundations will accept it, others won't. But the point is that I think they could escape the taxation. So it could make some sense. The one thing that this brings up for me, though, is probably the two most important people in finance in America today would be Janet Yellen, who is the Secretary of the Treasury. And her first comments on this topic was, isn't that the stuff of illicit and illegal transactions? So well, if you're the Secretary of the Treasurer and your name is on just about every dollar bill that goes out, you cannot be a Bitcoin fan, I can assure you of that. But that was her reaction. And of course, Jerome Powell said, it's not a legal medium of exchange. It's kind of like a store of value like gold. And of course, they don't want to be compared to gold. So obviously, Jerome Powell would have big problems if people started dumping dollars in favor of Bitcoin. So he's not a fan too. So that's people's natural reaction. And to the extent that policymakers are skeptical of the motivations behind a lot of the transactions, I think that's a negative for the investment case.
It's come up from my board members because about being hesitant of accepting Bitcoin because of concerns about where the money comes from, interestingly. I have a follow-up question, if I can. And it's regarding the global warming aspect of Bitcoin. I judge a lot of debate tournaments, and this is a major thing that gets brought up around cryptocurrency by debaters all the time, is that it's really bad for the environment, that Bitcoin, any not only Bitcoin but any cryptocurrency is really bad for the environment because of the CPU usage that it's taking in order to create these links. So do you guys, I've heard it from high school debaters. I don't know how serious to take it. Like, you just mentioned it in your presentation. So do you believe it is really a big global warming kind of issue, a climate change kind of issue?
Yeah, no, I certainly think so. I think as people's eyes start kind of reviewing, I think more of the investment case for Bitcoin, and of course, with such a focus on ESG these days, I think as people start to really think about, kind of the social aspect of what investments that they're making, Bitcoin is a big user of energy. A lot of cryptocurrencies are, some of them are very low users of energy, which they, flout in their marketing and all of that. But
hey, Amy, okay, I need to get off and okay, thanks.
I think, but I can look it up and see if I can share it with the group. But Bitcoin does use a lot of energy, and I think that could be, maybe the something that maybe ends up being, the nail in the coffin, if that ever is to come, because we've all seen how important these ESG aspects are to.
Yeah, Fritz, it's Jim Fleischman. I actually know a little bit about the energy usage. And it's enormous. And I think it's worth explaining why. The way you mine Bitcoins is by solving complicated mathematical equations. And the amount of computing power necessary to solve these equations is enormous. And every 210,000 blockchain units that create another Bitcoin, uh, start something called a half-life, where it takes twice as much energy to create the next set of Bitcoins as the last set of Bitcoins. And as you get down below where we currently are at about 18.5 million coins, every time you have one of these half-lives, the energy content required to solve these complex equations goes up by a factor of 2. And so it's an exponential function. And so theoretically, when you get to the last Bitcoin, the 21st million Bitcoin, it's going to require an infinite amount of energy. So at some point, it's going to become uneconomic to even mine these things, which is one of the reasons you would expect the price to go up, because to create new Bitcoins is going to cost more energy. But I think currently the amount of energy being utilized to mine Bitcoins today is about the amount of energy that it takes, this is on a daily basis, to light up the city of Rio de Janeiro. I mean, there's a huge amount of energy being consumed to mine Bitcoins. And as the number of Bitcoins in existence increases, the amount of energy to create new Bitcoins will double every time it a certain number. I can't remember how the formula works, but an enormous. So it's it's unquestionably an environmental issue, and becoming more so every day.
Yeah.
I agree with that. What a couple of people are saying, though, that to the extent that we can shift electricity production from fossil fuels to renewables, that potentially could reduce the problem. And of course, the other thing to say, well, good, so we're going to stick with gold, and gold mining is not exactly a non-polluting human activity. So there are some people saying, nothing is perfect along those lines.
David, Fritz, have any of your clients gone into Bitcoin, and what has been their experience?
So we have not advised any of our clients to get involved in Bitcoin. Fritz has done a lot of research on ways that we could add Bitcoins to people's portfolio. And, by virtue of our customization mantra, we will invest in assets that we ourselves are not proponents. They won't get to do it without first getting a stern warning and a thorough investigation and rationale as to why that's not something we're recommending. But at the end of the day, we will accommodate. Fritz, do you want to talk a little bit about some of the investment vehicles that may be available?
Yeah, certainly. And so we're seeing really the main way to get invested into Bitcoin from a just everyday investor is the Grayscale Bitcoin Trust. So the ticker is GBTC. That historically has traded at a premium to its net asset value, but it's currently more recently has been at a discount. But that's really, I think, a reflection of the fact that there have been several applications submitted to the SEC for Bitcoin ETFs. They have historically denied those, but there's some belief that we're at a point where there's enough interest in it, and it has a somewhat long enough track record to warrant having a way for investors to get access to the asset class. And so potentially, it could be months, it could be a year from now, we might see a Bitcoin ETF. So really, from just a simplicity standpoint, GBTC is a way. There are, I know Fidelity for the wealth management clients on their platform with a certain asset, net worth amount. They have a fund that's available. It has, it's more, you'll get a K1 for it. So it's not really simple as a tradable ETF. But there's access to Bitcoin through that. And then there's, of course, the CME, Chicago Mercantile Exchange, has Bitcoin futures. Historically, they've always been linked to one Bitcoin, but now I think they are going to now have they're breaking it down to $10,000 in Bitcoin exposure per contract. So there's access there. And then even I know at the Stop and Shop in Berkeley Heights, you can purchase some Bitcoin from the Bitcoin vending machine that they've got set up there or had set up there. So there's various ways other than, and then of course the Coinbase. You can create a new account with Coinbase or any of these other crypto exchanges, and you can buy Bitcoin in fractional amounts there. Though you'll have to do your own tax work with really, I think, across all of these, but.